Hello everyone. Good morning to you, and welcome to this morning's Forex Morning Mastery as we prepare for the second half of the week. Though we're coming in an hour later than expected, but the good news is that we're here, and of course, getting ready for the second half of the week. And I promise you, this second half is going to be a volatile one. We are going to be seeing a lot of market participants coming into the picture. We've seen a little bit of break in the market since the beginning of the week as market participants anticipate the major event we are looking forward to this week. We have the GDP for this week. We have the Bank of Japan's interest rate decisions. We have the Fed interest rate decision for the second half of the week. We have the core PCE. We have the NFP, ISM manufacturing PMI, and of course the August 1st tariff deadline from Donald Trump, all of which are going to be playing a significant role in the markets this week. And if you are a fan of any of the assets we are monitoring this week, I'm talking about the USDJPY, the XAUUSD, and of course the US crude oil. This is not a session you want to miss, as we are going to be delving deeper into the market to understand what market participants are thinking, both from the fundamental perspective, and of course relate this understanding right on the chart. So grab your favorite beverages, your favorite biscuit, what have you, and stay tuned in. Don't miss out on this one. For those who are joining me for the first time, you're highly welcome on board, right? I'm very excited to have you here with me this morning. My own name is Sheriff Daramola, and I'm going to be your host as I take you on the trading journey where we will be delving into the market together to have a deeper understanding of what is going on and how market participants are thinking. Of course, we need this information to strategically position ourselves for the next move. And I do encourage you that during the course of the session, feel free to engage in the comment section. If you have any question whatsoever, no question is insignificant. Drop them in the comment section, and I'm here and willing to be of help in that regard. So once again, you are very much welcome on board. So with that said, here we will be delving right into the business, and as always, you know how we do it here. The first thing we are going to be doing is to deliberate on the fundamental factors that is influencing the US dollar market dynamic. It's important for us to understand this. We know how the US dollar influences the assets we are monitoring, be it the Japanese yen, the gold commodity, and of course the US crude oil commodity, all of which are a US dollar related assets. And as we head into today's session, all eyes are on the Fed. Remember, the Fed is expected to keep interest rate unchanged at the current 4.5%, as you will see here. So what you are seeing on my screen is the economic calendar. But at the moment, traders are watching closely for hints about when rate cuts might start. And this is why majority will want to be listening to the FOMC press conference, where the Fed chairman is going to be answering questions from the media. And a more hawkish or cautious tone from Powell, that is the Fed chairman, could boost the US dollar or weigh on it depending on how the market digests the information. Then we are also going to be looking at some labor oriented markets, that is data that going to be giving us an insight into how well the US labor sector is doing. So I want to include the medium impactful event, which will be giving us a broader look into that. So first of all, we have the ADP employment change coming up about 12:15 p.m. UTC. That's 1:15 p.m. local time. It's a labor-oriented data. And then we also have, I think we also have another one coming up tomorrow, I guess. Yes, tomorrow we also have another one, the initial jobless claim count, all of which are going to be giving us an insight into how the US labor market is doing. And from the recent US job data, that is JOLTS, we saw, was it not yesterday? Yes, JOLTS job openings. Yesterday, Tuesday, July 29th is the one you're seeing right here. It pointed at a possible slowdown in the US labor sector, as we saw the actual figure coming in a little bit lower than what market participants were expecting. So we saw an actual data of 7.437 million, below the expectation, and of course way below what came out in the previous month at 7.77 million. And if this trend continues, it could weaken the US dollar, as the Fed may lean towards easing interest monetary policy later. Now we also have the consumer confidence report. I don't know why the FX trade economic calendar doesn't show these figures, but from what we saw, despite jobs slowing down, consumers are still feeling optimistic about the US economy, and there is still a lot of spending, as the consumer confidence report came in a little bit higher than expected, which keeps the economy afloat and offers some support to the US dollar. And with that said, here we have some major big data coming up today. For instance, we have the why is this thing doing like this? Okay, so we have the core PCE, which is the, I think we have the, hold on a second. Yes, we have the core PCE coming up tomorrow. So for those who don't know, the core PCE is also an inflationary data. And what do I mean by that? It means that this information here will tell us if inflation is still there in the United States. And it is generally believed that the core PCE is the Federal Reserve preserved interest rate gauge. So everyone definitely will be looking forward to this one. That's tomorrow, 12:30 p.m. UTC. Then today we have the gross domestic product annualized for quarter 2 from the United States. This will be giving us an insight into how the US economy had performed in the last quarter. So this is going to be giving us revaluing the goods and services produced within the US economy in the last quarter. And if you have been following us, the GDP in the last 2 quarters has not been impressive. We've seen contraction in the US economy, but based on what is on ground right now, economists and market participants are projecting that the US economy will grow, or let's say expand, by 2.4% for the previous quarter, as against the deficit of 0.5% in the upper quarter. So we look forward to seeing what the actual data will be. Will it come in just as market had expected, or even come in below it? And depending on what the outcome will be, will determine how market will react to the US dollar. Of course, if the data comes in higher, the dollar is expected to rise. So what we are sharing here is a major releases that could shift the direction of the US dollar, depending on how depending on how they come out. So we're definitely going to be looking forward to them. So the ADP is 12:15 p.m. UTC. The gross domestic product is coming in 12:30 p.m. UTC. Then the Fed interest rate decision, one of the major events for this week, is coming up by 6 p.m. UTC. That's about 7 p.m. local time. So we look forward to that one. Then the Fed chairman will also be answering questions from the media by 6:30 p.m. UTC. So if you are trading the US dollar, you want to be familiar, you want to keep yourself abreast with the outcome of the data that we are looking forward to. Then from the Japanese economy, since we are monitoring the Japanese yen, we have the large retail sales data. I think we'll talk about that when we go into the Japanese yen. Now let's go into the charts of the US dollar index, that is the DXY. So what you see on my screen is the DXY, a chart that gives us an overview into the performance of the US dollar across the major currency asset. And for those of you who are with me at the beginning of the week, remember we were identifying a simple technical structure here in the form of a descending channel, right? We had this resistant line here marked out after connecting the series of lower highs, and then we had the lower lows connected to give us the support line of that descending channel. And if you remember vividly, we were somewhere around here at the beginning of the week where we saw price closed the previous week exactly around the resistant line of the descending channel. And the question that was popping in our mind at the beginning of the week was whether or not price would respect that resistant line one more time to incite price dropping to the support line, or even breaking out of that structure to initiate another wave of bullish momentum. And of course, the later was what happened. We saw price break out both the resistant line and the key level at the $97.80 area to incite a massive move all the way into the $99 level. And if you look at this closely, you will see that the last 24 hours have seen price continue to consolidate around that $99 area. The last time price was here, we saw what happened. That was last week. We saw a massive push to the downside, and right now price is back into that area. And of course, you would agree with me that we are at a crucial juncture. Now the dollar is at the moment waiting for a spark. So today's Fed tone and upcoming data will set the tone for the second half of the week. So we'll need to be very careful, monitor how price action will react to the structure, and that will determine if we are going to be seeing a breakthrough of the $99 level, or is there a chance for price to drop back into the resistant line of the descending channel as a retest of structure. So you will agree with me that we are at a crucial juncture, and depending on what happens today will determine if we are going up or we are going down. Now let's go right into the assets we are monitoring for this week. Let's see how the US dollar has influenced these assets. So the first asset we are going to be taking on this morning, as always, that's what we usually do. The first one here is going to be the US crude oil market. And of course, we've had a fantastic week so far on this asset. Remember, I was telling you all on Monday that I'm not likely going to trade this asset. But when we begin to notice some familiar structures evolved on the 1 hour time frame, we decided to position ourselves above the $65 area. So let's look at what we were talking about at the beginning of the week. So the first thing we observed here on the 4 hours time frame is the fact that the last 4, 5, 6 weeks, the market has been confined within a $4 range bound structure between the $64 level and the $68 area to emphasize the prevailing uncertainty during this specific period. And one of the things I said here on Monday was that I will maintain a bullish bias as long as price remains above the $65 area. So we saw here in at the beginning of this month, price broke out of the 65, and ever since that breakout happened, you will see that that $65 area had become a robust demand zone. Every time price comes in here, we see our buyers take over the market. And of course, I said here on Monday that I will be looking for buying ideas above that structure. I think we triggered a buy position during the live stream on Monday. Yes, we did. So let's scale down into the 15-minute time frame. So before we scale down, I was saying that if you are very ambitious, you can be looking at your TP at the $68 area, which was the resistant line of the range bound. And of course, you can see price did move over 300 pips in that direction before price dropped back to the downside. Now, with the situation we are having right now, price has finally broken out of that resistant line. This is for the first time in about 6 weeks, which is something very how will I put it, very convincing that buyers may likely be on the verge of increasing the momentum. And of course, we have a lot of factors behind the scenes that is likely going to continue to influence this. For instance, the geopolitical tensions and supply fears, especially from Trump's aggressive tone on Russia and China. And if this continues, for instance, was it not 2 days ago, President Trump gave Russia 10 to 12 days to make progress on ending the war in Ukraine. Now, this was against its previous narrative of 50 days. And if this 10-12 days elapse, they are likely going to be facing a 100% secondary tariffs. Now, this tightening deadline is going to be causing a lot of concerns in the global market. And as you know, the US is also pressuring on China's oil imports over buying Russian and Iranian oil, raising stakes for global supply disruption. And if this continues, the path for least resistance for the US oil will remain to the upside. Now let's scale down to the 1 hour time frame, our execution time frame, where we captured that bullish momentum. So this was the structure we were looking at the beginning of the week, remember? And we were right here during the our live session. This was where we were during our live session on Monday, and I did mention that if you want to join me on that journey as we take the breakout of the $65.26 area, that was the resistant line of that range bound structure we marked out earlier. So we saw price break out of the structure, and look at what happened in the last 2 to 2.5 days. Price did move significantly, moved over. If your TP had been at the 68, which was where, mine was around 67. I didn't know that price will move that far. I had about 170 pips. But if yours was at the $68 area, as we had projected during the live session, you would have taken over 270 pips. And of course, if you had left your position running just to maximize the potential of that bullish move, you will currently be having over 300 pips running at this point in time. Whichever case it may be, if you're still having your position running, it is high time you moved your stop loss. Worst case scenario, $68 area is looking promising as we continue to monitor price action. So right now, price is very steady above the $68 area. A critical structure has been broken thanks to growing supply concerns. With the way things are at the moment, it appears that the price may likely continue to rise. Why have I said so? Well, the pressure on China oil imports, Trump's new threat on Russia, which is resulting into market tension at the moment. But something is also of concern around this bullish trend we are seeing here. Of course, you see price has tested let me say a 6-week high at a $69.35. This happened during the later part of the New York session yesterday, and we saw another attempt to break out of that structure this morning, which obviously failed, as we saw a resistance. Buyers found it difficult to break out of the $69.35 level, and this could be attributed to the surprise crude inventory build. So yesterday, the API report showed a 1.5 million barrel inventory buildup as against the expected drawdown. Now, this puts some pressure on the bullish momentum we are seeing here, and this is evident on the chart as we see price continue to reject the $69.35 level. Now, for those who don't understand what this API report means, now the API report tells us the status of the inventory of crude oil in the United States. Now, if the inventory drops, that means that, so the inventory is like a stockpile. So if the inventory drops, it means that the demand in the market was so huge that they had no choice than to go into their stockpile to feed the demand in the market. But if the inventory builds up, it means that the demand in the market has reduced. And so what does this mean? They were able to save more crude oil. So for the bullish momentum, this is not a good sign. And I guess this is one of the reasons we're seeing those who had capitalized on that bullish move right from the $65.26 level are beginning to take some profit off the chart, especially as we head into today's Fed's interest rate decision. So market though is expecting the Fed to hold interest rates steady, but any surprise could shift oil demand expectation and impact the price direction. So at this juncture, we need to be very, very careful. So as we anticipate the Fed interest rate decision today, we have a new structure that can be guiding our decisions going forward. So we can see that since price tested the $69.35 level, we saw a range bound structure. And of course, let me mark this out. We have the $68.60 level, right? $68.60 level. So this is, for me, is a range bound, right? Price confined within the $69.35 and the $68.60 area in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So for 14 good hours, the market was oscillating within that range bound before we now saw price breaking down the $68.60 level. Now, you know how we use our range bound structure, of course. Whenever we identify such, we either wait for price to break out the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, I've missed out on this one right here. So let's see if the market will come back, retest the structure in an attempt to continue the downtrend move. And if this is going to happen, this will be the beginning of a retracement move to the downside. Of course, it is quite reasonable that if you had been part of this strong bullish move all the way here, it is reasonable to consider taking some profit off the chart. And if you do so, we see price retrace to the downside. So big players in the market may want to start taking some profit off the chart as they anticipates the Fed's interest rate decision and of course the Fed chairman's narrative. And they might not want to put their money on the table prior to that event, and we could be seeing price drop significantly. So if that is going to be the case, I want to look to sell the USOILSPOT at a retest of the structure. If the market permits me, that is, if the market comes back to retest, then we'll join the move down. Now, as we move down, the price will have moved about 60-65 pips in our favor, and as soon as it moves close to the $68 area, we move all stop losses and secure that sell position. You know why? Well, remember the $68 area being a strong resistant line for about 5 to 6 weeks. Of course, we want to see how price will react to that structure. Is it going to come here to retest the structure in an attempt to continue the uptrend move? Or are we going to see price break down the structure to incite another wave of bearish momentum, maybe back into the key level at the $65 area? So we are going to watch. If we see a retest of structure, we sell the $68.60 level, and then as soon as price moves into the 68, we move all stop losses, secure the position, and wait to see how the market reacts to the $68 area. If it drops below, we had more sell. But if buy pressure persists here, that is, sellers are finding it difficult to break down, well, I can tell you this might likely be another platform for an uptrend scenario. So let's take note of this. Let's mark the structure out on our chart, and we'll use it to help us navigate this market today. And of course, if there is anything new that comes up as we continue to monitor price action ahead of today's event, I will update us accordingly on my Telegram platform. So that is what I'm looking at on the USOILSPOT today. Now, if price climbs up back, instead of doing a retest and it continues to thrive towards the upside, a breakout of the $69.35 level will confirm the strength of the buyers. So we will be looking to add more buy positions to that existing trade. So that is what I'm looking at on the USOILSPOT for today. If you have any questions or you need some clarifications, feel free to let me know in the comment section. So let's see how the market is going to play out today. This is a simple structure that will be guiding our decisions. So I would want to wish us all the best of luck today on the US crude oil. And let me take 5-10 seconds. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. Stay tuned in. All right. So I guess we are all on the same page, right? No questions, no comments at all. So we are good to go. Hope you've marked out the structures accordingly, and let's see how the market is going to play out. So I wish us all the best of luck on the US crude oil. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY, and of course, though we've seen the price of the US dollar break out of the resistant line of the descending channel we marked out on the 4 hours time frame. And remember, I told you I missed out on that bullish move that happened on Monday, the breakout of the resistant line of that range bound structure, which happened prior to the streaming of Monday's Forex Morning Mastery. And after missing out on that buy at the breakout of the resistance line, I told us that we have two options going forward since that breakout happened. One of which is price going through a consolidation, maybe evolving into an uptrend continuation pattern to help us continue the uptrend. And I think we identified a structure on the 15 minutes time frame. I don't know if we still have it. Yes, we do have it here. And we bought the breakout of the resistance line, but unfortunately for that buy position, it did not do well. We were taken out of that position in a loss. Now, the second option I mentioned appeared to be gradually maturing right now. And the second option was that we will wait for price to come back and retest the structure that was broken. And if you look at what has been going on in this market in the last 1, 2, 3, 4, 5, 6, 7, 8, 9 hours, you will see it appears price is back into the structure that was broken on Monday. And of course, at the moment, the USDJPY is caught between Fed caution, Bank of Japan's hesitation to increase interest rate, and of course a mixed market vibe at the moment. And this has led into some extended sideways trading activity in the last 10 hours or so, as price is confined within a range bound structure. Now, today's Fed's meeting will likely set the next clear direction. Until then, it's mostly going to be sideways, choppy market condition with a slight risk of tone favoring the yen maybe, or the US dollar. Now, what are the factors here that will be setting this tone for today's trading session? Well, of course, if we look at what has been going on here in the last 24 hours, it's quite clear that the US dollar has been under serious pressure. As you see, price dropped to the downside, and this could be attributed to some of the events we saw yesterday, I guess. Okay, so we saw the JOLTS job opening, which came in way below expectations here, hereby denting the confidence of the investors in the US dollar. Now, with that said here, I don't think that US dollar cool off could last long. Why? Well, traders don't expect Japan to raise interest rate yet, of course, which limits how strong the yen can get at this particular point in time. And if we look at the market's nervousness ahead of the Fed and Bank of Japan's interest rate decision, I did mention this earlier, that the Fed interest rate decision is coming up later today, right? And of course, we are also looking forward to the Bank of Japan's interest rate decision coming up tomorrow. And investors are playing it safe. They are likely going to be playing it safe ahead of today's FOMC meeting and tomorrow's Bank of Japan's update, giving a slight edge to the safe haven yen in the last 24 hours. But with the way things are going, the Feds are expected to leave interest rate unchanged today, but traders are watching closely for any clues about when cuts might start. And as a result of this observation, in conjunction with what I'm seeing on the chart, I placed a buy this morning. Though I had bought yesterday. If you look at the bottom of your screen, you will see that I have two buy positions on the USDJPY. I bought one yesterday. Unfortunately, I did not place my stop loss. I forgot. Okay, on Monday, sorry. I did not remember to place my stop loss. I forgot. And this morning when I saw the structure, I felt it's still within the auspices of buying this particular asset. So I placed another buy from this juncture and hoping that this will continue in the upside, especially after considering the fundamental factors in this particular market. Now, if we also look at the political uncertainty in Japan, the recent election loss for Japan's ruling party also has added policy uncertainty into that environment, which could complicate the Bank of Japan's next move. So for me, I'm still banking on the US dollar, but we don't know where it is really going to start that bullish move. Is it going to go to as far as the trend line before it starts the bullish move, or is it just going to start right from this particular area? So for me, the path of least resistance still remains to the upside, and the only condition that will make me sell the USDJPY is for me to see price drop below the resistance line of the descending channel, which will tell me that price is back within seller's territory. If this does not happen, I will just continue to look out for patterns and structures that support buying ideas. Maybe from here, which I am already in, hoping that it will last long, or if we get taken out, I will look for buying ideas again around the resistance line to join that uptrend move. That is why ensuring that you have a well-defined risk management strategy in place is very, very key. So that is what I'm looking at on the USDJPY for the second half of the week. I still maintain a bullish bias thanks to no rate hike from Bank of Japan. Fed's likely going to be holding interest rate steady, Japan political uncertainty, all of which for me at the moment is supporting the US dollar. So let's see how the market will play out. And of course, it appears we are seeing something like a reversal setup evolving here. We have an impulsive leg to the downside. Price go through a consolidation. We have a neckline to be broken. This might likely welcome more buying ideas. Let me mark out that level quickly. Let's see. We are looking at psychological levels. Remember, 148.150. Somewhere right here. So 148.150 is also another level that if you are yet to join, you want to be part of it right at the break of the structure. So if you are willing, I welcome you to join me on this bullish journey on the USDJPY. So if you're buying above the 148.150, you definitely want to be having your stop loss right below the previous low, dovetailing to about 35 pips for stop loss on that one. So there you have it, my in-depth look at the USDJPY for today. I hope I made myself very clear. If you have any questions or you need some clarifications whatsoever, feel free to let me know in the comment section. So I'll take another 5-10 seconds off. Let's see if there are any questions before we go ahead with the last asset on our watch list for today. Stay tuned in. All right. I guess we are all on the same page and not to take too much of our time. I hope you've marked out the structures accordingly. The buy position I took this morning is still doing very well. Hopefully it lasts long. And ensure you have a structured stop loss to help cut losses early if price goes against odds. So on that note, I wish us all the best of luck on the USDJPY. So moving on to the final asset on our watch list. So the final instrument that we are looking at today is my favorite, of course, and that is the XAUUSD. And of course, you'll see that the market is still trading within the range bound structure we identified at the beginning of the week. Remember, for those of you who saw my weekend video on the gold commodity, remember we had an ascending channel identified on the 4 hours time frame, and as at the beginning of the week, at the end of last week, we saw price closed just right above the support line of the ascending channel, giving us a sign that we may likely see the gold rise from here to find new highs again. But unfortunately, the early hours of the week saw a choppy market condition where price action remained confined within the 3,344 and the 3,325 made for the first 11 to 12 hours of the week. And with this range bound structure we identified here, it became the yardstick we were going to be using to navigate the market for this week. And what we were looking out for was price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And of course, look at what happened here. I think a couple of hours into the New York session on Monday, we saw price break down the support line, triggered a sell to about 220 pips move before the price began this choppy situation in the last 24 to 36 hours. Now, one thing that strikes me here is that it appears that this breakdown here is turning out to be a false breakdown. As you will see, price is back above the trend line, and of course within that range bound structure we identified on Monday. Now, is this going to be the beginning of another wave of bullish momentum? If you would ask me, gold appears to be slightly bullish at this point, but the market is on a pause mode. Everyone's eyes are on the Fed tone, hawkish or dovish, that will set the next real direction. And this is evident on the chart. You will see the market has been a little bit consolidating since yesterday morning, if you would ask me, consolidating within this range. And the buy position I took on Monday, if you look at the bottom of your screen, it's still running, and I'm in a serious loss, about $30 thereabout. I could afford to do that because of what I have gained on the XAUUSD, and I still strongly, one way or the other, still think that the gold still has a platform to rise. Well, one of the reasons is the recent weakness in the US dollar, as we have seen in the last 24 hours. This helps gold push up, but gains appear to be limited as no one wants to make bold moves before the Fed chairman's speech later today. Then another factor that's making me feel confident in the buy position, that's making me still hold on to the buy position despite the loss, is because of the JOLT job openings we saw yesterday. Let me show you again for those who are just joining us. We saw the JOLTS job opening coming in lower than expected, which is not a good signal for the labor market in the United States. giving the US dollar a little bit of dip yesterday. Now, if we also look at the FOMC decision, which is in focus right now, traders, though holding back as everyone waits for this announcement today, what the Fed says about future interest rate cuts will heavily influence both the US dollar and the gold commodity. Then another factor here, which I forgot to mention, that is influencing a strength in the gold commodity is the tensions around the US-China trade talks and general market nervousness. This kind of general market nervousness usually keep the gold supported, considering the fact that it is a classic safe haven asset. Now, with this, for me, I still strongly believe that the path of least resistance is still to the upside. And as at this point, I will have no other choice than to place a stop loss on my buy position below that key level, because if price can drop back down, I think below that trend line, I guess these bullish expectations will be invalidated. So it's time I move a stop loss on my position. So I'm putting it right below the trend line and that key level. So if the price goes below that structure, I know that that buy position is no longer valid. Now, in preparation for today's trading session, for those of you who are with me on my Telegram and TradingView platform, you must have seen my technical setup for today. So let me share that with you. It's on the 15 minutes time frame, and this is what I'm using to navigate this market today. So after capturing the character of price action since Monday, after that massive dip we saw that as soon as price tested the 3,301, price had consistently found higher lows. And if we mark out these higher lows, we have a beautiful ascending trend line to work with ahead of today's trading session. And you know how we use our ascending trend lines. As long as price remains above them, we'll continue to look out for patterns and structures that support buying ideas. Now let's zoom into what has been going on in the last 24 hours. Is it 24 hours, or let's say it's, yes, 24 hours. 36 hours thereabout. Now the last 36 hours, the market, you see, despite that bullish momentum, we saw that the 3,334 area has become a strong ceiling. It has been negating the bullish attempt to break out of that structure. Every time price comes in, we see sellers come in to negate buying pressure. And this also happened about an hour ago. We saw this happen. Selling pressure persists around that area. Now, the critical question going into today's trading session is, will the 3,334 level maintain its resistance structure to incite a sell-off? If that is going to be the case, then we are looking to sell the gold commodity at the break of this ascending trend line, which interestingly lines up with the support here at the $3,327.50 area. So if price can break down, retest that structure, well, I guess it's time to start selling the gold. We don't know what the big players are saying in the market. Remember, I used to say here that these big players have insiders in this department that informs them of what is likely going to be published on all of these events, and based on that, they build a position ahead of that event. So if it appears that the report, the intending data is likely going to be favoring the US dollar, as this resistance line is not breaking in the last 36 hours. So with that said here, I will place a sell stop order below the below that support line here. So I will place a sell stop order below that $3,327.50 level. By the time price breaks down that structure, I guess we will be continuing the downtrend that started at the beginning of this week. But if that is not the case and we see price go ahead to break out of the 3,334, then that is all I need to confirm the strength of the buyers. So if price can break out of the 3,334, I'm very confident to join an uptrend scenario. So that is what I'm looking at on the XAUUSD going into today's trading session. It's a simple trading setup. We have a range bound structure sitting at the tip of this ascending trend line where we are waiting patiently for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. So that is basically what we are looking at going into today's trading session. So I do hope I've made myself very clear. If you have questions, let me know in the comment section. And of course, as I continue to monitor price action, if anything new comes up, I will definitely update us on both my TradingView and Telegram platform. So let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. All right. So in the absence of no questions, I guess we are all on the same page. And for those who are joining me in the last couple of minutes, don't worry, you will be able to rewatch the live stream as soon as the end of the session. All right, so stay tuned in to look at that. So today we were able to run through all of the assets on our watch list. That is the US crude oil, the USDJPY, and of course the XAUUSD. And interesting enough, we were able to identify simple trading setups, simple clean trading setups that we are going to be using to navigate the market today. All we just need to do is exercise patience and allow the structures to mature. And I also went on to tell us how important the second half of this week is, as we have major events that will be bringing a lot of big players into the market. Today we have the ADP employment change, we have the gross domestic product annualized for Q2, and of course we have the Federal Reserve interest rate decision, and to top it is the FOMC press conference where the Fed chairman is going to be speaking. So these events you see here are going to be bringing in a lot of big players into the market, increasing the liquidity, and there is a high chance that price will hit our TP faster than expected. So we do want to be taking advantage, or want to be on standby to capitalize on whatever advantage the market is giving us today. So be on standby, mark out your structures accordingly, and let's allow them to mature before jumping into the trade. And that reminds me, we also take into account that the Forex market is an uncertain environment. You could risk all you have, so ensure that you have a well-defined risk management strategy in place. Be consistent with it so that if price goes against us, you do not lose more than what your emotions can manage, right? And for those who joined us for the first time today, I do hope you are able to gain one or two things from the discussions we had. And if you did, why not join us in our subsequent editions trust me, the more time you spend with us, the better you get to comprehend my analytical approach. Once again, for those who are just joining me right now, you have an opportunity to rewatch the live stream immediately after it ends. So you have nothing to lose. All right. All right, everyone. So it's on this note, I guess we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys, and I want to wish us all the best of luck today. And I will be keeping us updated on my Telegram and TradingView platform as I continue to monitor price action. So it's on this note, I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.